Hey, what's going on, everybody? So prepare yourself for the roller coaster ride that is the housing market. So buckle up and hold on tight because home prices have yet hit another record high, reaching levels that will make your wallet scream in horror if you're buying a house right now. And hell, we're not even in October. So according to the Black Knight Home Price Index, prices skyrocketed by a whopping 0.7 nationally compared to April. Now, I know what you're thinking, big deal, it's only 0.7%. Well, that's until I tell you that prices have been on the rise since January of 2023, and they're showing no signs of slowing down. I mean, it seems like the housing market has sort of developed a case of amnesia after last year's brief reality check from the rising mortgage interest rates. Like, for a while, it seemed like the housing market was going to crash when the rates started to climb from 3% to 5%, 6%, and then 7%. And then we kind of saw that the activity was slowing down a little bit. So a lot of people were like, okay, this thing is about to go down, but nothing has really happened. So what is to blame? What is going on? I'm going to explain in this video. First and foremost, there are just a few homes for sale. That's plain and simple. The shortage of available properties in the resale market has caused an increase in the number of buyers turning to the market for new homes. In fact, sales of newly built single-family homes rose for the third month in a row in May, up 12.2% from April, and that's a 20% gain over last year. New home construction went up by most in the last 30 years, according to the latest data on housing starts, which rose to a seasonally adjusted annual rate of 1.631 million units last month from April's downwardly revised 1.34 million, the Commerce Department said on Tuesday. May's rate actually was the highest since April of 2022, which was then the highest since 2006. And surprisingly, one of the few exceptions apparently is Austin, Texas. So inventory in Austin is running above pre-pandemic levels, putting pressure on the prices, which have actually fallen 13.8%. So basically, home prices in Austin, Texas have gone down by over 10%. That's a little sign of not really a recession, but the prices have definitely come down by a lot. So anyways, what does this mean to you? When actually it kind of depends, because on the one side, if you bought a house prior to COVID or during COVID or what the hell, maybe even as early as 2022, your equity position has gone up. On average, home values have gone up about 8% since the rate started to go up in 2022. So we're talking about maybe since the summer of last year or maybe the spring of last year. So this actually means that, for example, if you bought a $600,000 home in the South, right, which is the area that has experienced the most amount of home price gains over the last several years, then your home will actually be worth almost $650,000. But on the other hand, if you are thinking about buying a house, this might be one of the worst times probably in the last several years to buy one, because home affordability in June was close to the worst month of affordability in the last 37 years. I mean, we're going back even when Ronald Reagan was president. And so basically, you're fighting two things, and both might not be coming down anytime soon if you were hoping for at least one of them. And the first one is obviously the home prices, which are back to the highest in history. The average price of a home right now in America is $438,000, if not a little bit more. The second one is mortgage rates, which have sort of been stuck between 6% and 7% since the summer of 2022. And kind of what that does is that it has two big effects on everybody. So for home buyers, the combination of high prices and high interest rates mean that a monthly payment is going to be much higher, which is going to affect affordability. Everybody's sort of going through it who's buying a house right now. And if you're actually buying a home today, even with a great credit score, I mean, we're talking about something over 760 and a 5% down payment, which is typically the average down payment of a first-time home buyer, a $500,000 home today will have a monthly payment of about $3,160 a month. This is assuming basically a 7% interest rate. And that doesn't really include things like mortgage insurance, PMI, taxes, and the property insurance. So once you factor everything in, you're probably staring at a $4,000 a month total monthly payment. And here's a crazier thing. Right now, someone looking to buy a $500,000 home will need to make at least $107,000 in order to qualify for just a regular standard conventional mortgage. And that's assuming that the person doesn't have any credit card debt, any auto loans, any student loans. So if they have any other debts besides what the mortgage is going to be, then that number will come down pretty drastically. But anyways, what if someone has a house to sell and they want to move, but what if they bought or refinanced before the rate started to go up? They might already be at a 4% interest rate. Some people are at 3%, and some other people are actually below 3% interest rates. I mean, I, for one, did a few refinances, interest rates in the twos, especially because I did a couple of loans with a 15-year term. So my interest rates are in the twos. What is really the incentive of trading for, a 7% mortgage if your interest rate is at 3.5%? That incentive has to be extremely, extremely strong. And that's what keeping a lot of people, in a way, trapped in their homes. And maybe just a lot of people, they want to move up, they want to exchange their homes. It's probably worth for them to just do updates. And because equity positions have gone up so much over the last several years, something that's extremely common nowadays is what we call a home equity line of credit, where basically it's just another loan that does not touch the first mortgage. So they keep the same interest rates, but they get now this big line of credit that allows them to do any type of home improvement. Because of this, you guys are seeing that the supply of homes, in coupled with the high demand, is pushing prices up. So honestly, it's a big hamster wheel with no end in sight. And that's the housing market for you as of July of 2023. Now, there is something comforting to know. Obviously, if you're already a homeowner, your home value has gone up. But if you're looking to buy a house right now, I mean, it's one of those things where you kind of have to stomach the prices, and that's a little bit tough. So it really is going to be interesting to see how this plays out over the next few months, especially leading up to the election. I'm really not thinking that things are going to change too much. We might be sort of in this bounce of interest rates going up a little bit, coming down a little bit, depending on what inflation does. And that's honestly going to be sort of the saving grace, is that at some point in the future, if you buy a house right now with the interest rates at 6 or 7%, which, by the way, they are average interest rates over the last 80, 100 years, but compared to what was going on 5 years ago or 6 years ago, they are definitely high. So really, your only hope is that at some point the rates come down and you can take advantage of a refinance. And that way you can get those payments a little bit lower. Anyways, guys, hope you liked the video. Let me know what you think in the comments. And I look forward to seeing you guys in the next one. Thank you for watching.